All right. Thank you, everybody, for joining us. I'm so excited. We are going to have some fantastic information to share with everybody today. We have a great group of panelists today as well. Just so that everybody is aware, again, this is meant to be very interactive. It is meant for you guys to be able to ask questions and kind of add to the discussion as we need to. So feel free to either put questions in the chat or kind of raise your hand, unmute yourself, and kind of further the conversation as we get going here. And like I mentioned before, don't feel like you have to keep your camera off. If you don't want it on, you're welcome to, but I would love to see everybody's faces and be able to interact as we go through this. All right, so let's go ahead and get started. Our esteemed panelists today, I'm joined by Tom Gallucci, who you all know. Tom, wave to everybody. He's our SVP of Business Development. We are also joined by Jonathan Free. Jonathan, wave your hand. Jonathan is representing the TMC Emerging Tech Fund. And then we are also joined by Jody Hall today. Jody, wave to everybody. She is a strategy advisor for Nationwide Mortgage Bankers as well as other lenders. And so thank you guys for joining us. Really excited to have you kind of hear some insights from your recent opportunity to participate in the FHFA Velocity Tech Sprint, which is what we're kind of here to discuss today. Before we get going, I thought it would be kind of fun, even though you had very specific assignments in the tech sprint. I'd love to kind of have you guys share your insights in a different way. So I'm going to ask you to kind of dream with me for a second and be a little bit off the cuff. If you had unlimited resources and could only fix one thing in the mortgage industry, where would you start? Jody, can I ask you to go first?
Inventory.
Inventory, okay.
So I would probably take, I don't think she's on, but Christy Sook's team at the FHFA had a great idea about solving the inventory problem. And I think that we could take their idea and expand on it. And the infinite resources that I would have would be financially to replace a REIT, or would be a Jody-owned REIT, to be able to homes that are in trouble with lenders, the borrowers who are in trouble, buy those homes off of them and then sell them back to first-time home buyers, underserved communities, to help solve the inventory issue that we currently have, because it definitely, rates aren't going to solve the problem of rising home values and getting out of reach for a larger segment of the population, making it feel like the rich are getting richer in the United States for a number of reasons, but that being one of them.
She also had something, I don't know if it was presented, but it was about transferring your mortgage, like your rate from house to house. So if you had a 3% rate, you could move it to your next house, which would unlock a significant amount of inventory without, putting people out of their homes. I can't remember if that was presented. I know that was discussed in their group, but I thought that was a really good idea too.
All right, Jonathan, since you spoke up, what's your solution? Where would you start if you had unlimited resources but could only fix one thing?
APIs into everything. Like everything. Open APIs into every single data source. Like people, you'd know who they were, where they worked, how much they made, what their bank accounts had, the sales contracts, all that stuff, be a click of a button. That's my unlimited resources. It'd be quite a bit of money to do that.
Yeah.
But
Jonathan's going literally push button, get mortgage. And
that's right.
Maybe even a fingerprint, right? They can identify by fingerprints a lot of things right now. So facial recognition, fingerprint, just get mortgage.
Smile on the camera and get your mortgage.
I like it.
We'll call it free mortgage.
Free mortgage.
I like it.
That's awesome. Tom, what about you?
It's funny you mentioned Christy Sook's team, kind of solution out there, because it was actually, I think it was Amy Moore at our team that just sent a link earlier this week internally about porting your mortgage, kind of similar format where you could take your existing rate and apply it to a new property out there of increased value. But I don't know about many lenders that do that. Honestly, I had never even heard of it beforehand. So if I can find it, I'll kind of share.
I don't think that was I think that was a story of the once. I don't think that was a story of practical application, because the mortgage-backed security market doesn't allow for that.
That's right.
Right.
Yeah,
Exactly.
I just put it in the chat, the link.
Oh, you did. You beat me to it.
Yeah.
The money's
But
tied
no.
to the collateral. The money's not tied to the person.
That
Right.
is right. That's right.
And understanding that between John and Jody, you guys probably would go down a uniform data set or integration kind of template. If I could wave my magic wand, it would be really to create kind of a universal LO comp standard, maybe that caps at a certain point what originators can be paid, or readjusts, kind of basis point standards on there by purchase, by refinance, or niche product. And increasing that threshold, say on like CRA properties or for first-time home buyers, since we've probably all dealt with originators out there that if it's not their cup of tea, they typically shy away from those smaller loan amounts, which I think are really where we find, kind of the more pressing need in expanding the home ownership box. So that was mine, just because it seems to be always the elephant in the room that really prevents us from making major headway and reducing origination costs.
Yeah.
Someone don't put this snippet of Tom on social media, or he'll be the most wanted mortgage person in the industry.
Yeah, don't send us to your top producers.
Good thing you work on the vendor side.
I love it. Latasha, though, she agrees with you, Tom. So you're in good company.
Her lips to the regulator's ears.
That's right. Amen to that.
I love it. So, obviously, first, thank you guys for sharing. We do have a lot of things in our industry that are, opportunities, and I think there's a lot of ways that we would love to see our industry kind of continue to evolve. Y'all being a part of this FHFA Velocity Tech Sprint, you had to go through like a selection process. Like this is kind of a testament. Y'all being a part of this is kind of a testament to your expertise in the industry, and so we're grateful for you guys sharing some of that with us today. What I think we should do to kind of start with is talk about some of the main objectives. What were some of the things that, going into this that you guys were kind of tasked with?
So there were 5 problem statements. The teams could solve as many of the problem statements in their solution as they wanted to, one or many. So I'll tell you what the exact ones were, and then Jonathan can kind of expand on what the inferred ones were within that. So it was direct to source data, data quality, making sure the technology that you get the verifications that make the quality of data appropriate, the adoption and implementation, alternative data, and what sources can be used. And I think alternative data also leads into one of the segments that Jonathan will speak of, and then the digital experience and the trust from a consumer experience. And then Jonathan, you want to go into those like inferred or discussed outside of that we were trying to accomplish?
Yeah, so I've luckily through the tech fund, I've gotten a chance to work with the FHFA on a number of different tasks, and specifically they're looking at reducing time to close. They're looking at reducing costs, access to LMI and minority borrowers, and greater transparency for the consumer overall. The inferred is we're not able to get there on our own. And that was made pretty clear by the judges that they had and the things that they selected. They are looking for public-private partnerships. I don't know if that's a partnership, collaboration, general oversight. They do not want any one company having access to all the data and continually raising their rates. These are all like, they're not going to come out and tell you that, but I figured it would be good, a good thing to discuss, like what's on their minds. And you infer that by who the speakers were. You infer that by who the judges were, by the teams that won. The teams that won all were this sort of public-private or some kind of shared oversight in the private markets. And then privately, some of the ideas were really, really good that didn't win because they don't want one fintech company or two controlling all the data and then price gouging. So that those are the things that were a little bit more inferred. So I'm not going to name any companies on this in terms of what they're looking at. I mean, I know who they're talking about. I think everybody can infer that, but ultimately, this is about risk mitigation. They don't believe we can do this on our own. So our industry has had 20 some years of technology. We haven't been able to do it on our own, and they believe that public-private collaboration, partnership, whatever you want to call it, is the only way to actually start driving down the costs and achieving all of those other goals.
And I will say too, to tack on to that is it is also very clear that you don't have to fit one of the credit risk boxes of Fannie or Freddie to be able to accomplish that. And what I mean by that is if you're using, are there alternative ways to derive income that would be more fair to all borrowers that have alternative income sources? Is there a way, nothing is off the table? So I know a lot of times when you talk to Fannie or Freddie, their comeback is well, that would make us have to change our risk appetite or our risk model so that it can be found. That's not off the table. They very much are looking for ways to be able to have alternative ways in verifying income, assets, you name it, that is more fair and equal across the board.
Yeah, you're spot on, Jody. Really, everything we workshop from a solution standpoint, it was, well, let's bring in the fair lending expert here and apply your concept against that, whether it's using alternative forms of income or verification resources. That seemed to be more of the end game goal than fitting it in that existing credit risk box.
Yeah, I think they'll work with Fannie and Freddie to push on that as well. So that's something that was a little bit more overt, a little bit more inferred and not overt. So, expanding out Fannie and Freddie's guidelines, pushing them to adopt new technologies and look at things differently, maybe reduce the amount of documentation. That stuff is all on the table. What this looks like afterwards is something we can get farther into discussion, but ultimately they're looking at any ways of bringing in groups that can't, and they're looking at ways of making it more operationally efficient. You can tell by their pause on the LLPAs, what's the loan level price adjustments? Yeah. Their pause on that and how the industry, how the industry sort of responded. And I've gotten some comments that they really should have went out to industry first to discuss this. It may be paused, it may come back. We don't really know, but at least they don't want to make everybody more inefficient and more cost. And so that was, so we're talking about nothing is off the table to bring this industry in line for what their expectations are. Sandra Thompson said to me, she's like, you get on your phone and you look at a car and you click the button, your car gets delivered and you have your loan. She goes, why can't we do that in mortgage? I mean, so this is the most powerful person in lending. I have a feeling that she's on a mission and she's not going to stop till she gets it.
I think that's a great point. I mean, if all of us have our phones very close to probably where our hands are right now, I almost want to test it and see if everybody can like grab it and show. But yeah, exactly. It's within like our reach all the time. And when you can order something on Amazon and have it delivered in 2 days, when you can, buy a car with a push of a button and have it delivered to your home, right? When those things are as instant and easy for people to have access to, it doesn't make any sense to them why they can't get a mortgage quicker than 30 days, right? There's just lots of opportunities there. I want to build on one thing that you had mentioned, Jonathan. You said something about reducing documentation, and I have a little PTSD from 2007, 2008. So they're not talking about like just doing away with documentation, right? They're looking at how do we get direct to data connection so that we don't need those things from customers anymore, right?
Yeah, so you think about like we have a hangover from 2020 and 2021, and some companies still require that last paycheck before closing, like things that don't operationally cause risk, but create costs, right? So you got to get that last pay stub from the borrower, or you got to then use the work number again, which then that's another $50, right?
Yep.
Those are the kinds of things, and like think about like the last VOE that needs to be done. On the borrowers, you have direct source data from like the IRS or the work number, and you have a long history of that. What is the likelihood they're going to lose their job or quit their job before closing? And if they do, what's the likelihood then that they're going to then go get another one and still make their payments? And so these are the kinds of things that, the large deposits, it's like, okay, it's been forever, but everybody just, defers that bank statement, gets a gift, whatever, they get around it. So it's like, what does that actually do to your risk level? And my contention, and I think some of the folks' contention, is it doesn't change your risk level, or changes it in a marginal way that's better than essentially causing half or $500 million in costs for the industry. So that's the way that I think they're looking at it, and so we're going to keep pushing. At least I am. I don't know if Jody is or Tom is, but I'm going to keep pushing on that.
Well, and you think too about borrowers who have agency loans currently who have been paying. If they're in a situation where they're downsizing or staying parallel to what their current payment is, what is the risk? You already know what their income is, and if you close your loan in the last 2 years, I guarantee it's gone through QC at the agency, and they've already poked holes at the income and the borrower's ability to repay. So why do we then have to go back and verify someone you're putting in a better financial situation? So like, give them the same loan or lower with having to do the documentation again. It's almost like a hard loan on a different property.
They'll never get rid of the ability to repay, but we've adopted these weird standards that basically say, okay, we know we look 2 years back, 3 years forward, right? And I say weird standards because is that the really ability to repay? That's your snapshot. That's not the ability to repay. The ability to repay is this history that you've done, and you've seen people in these cycles. So if you can still get access to that data and understand somebody's pay habits and ability to actually repay, then why do we spend $14,000 trying to redo that? And I think those are the kinds of things that I think they're starting to think about. And again, I'll keep pushing until you get every single weird overlay and underwriting condition off. And the FHFA knows that like there are just things that we do that really don't increase the risk of default.
Or I mean that the updated checklist and getting a loan clear to close probably isn't up to date with the technology we can leverage at our fingertips, even on a lender's side to verify or re-verify some of that information without having to go out to a third party and then incur additional costs that get tacked onto the loan.
Well, and some of the tech that we have out there that allows us to kind of have direct to data connections in addition to all of those things, right? There's a barrier of consumer trust that we have to break through and utilizing it, right? So it's either you kind of have this direct data connection up front, but they have to put in their password, for example, right? And some of those kind of Finicity or Plaid or, those sort of things, integrations, you're having to have the consumer trust that you're only going to gather, specific amounts of data and for specific purposes. And I think there's all sorts of those things that add to kind of the kind of strangeness that is our consumer experience right now. And the good news in all of it is that people are starting to try to figure it out. And all of these, things are leading to new ideas and those sort of things. So we've got a couple of questions.
Yeah, I know Femi had his hand up.
Yeah.
I typed in the chat.
Okay. He says, how much of what John was just talking about is driven by the buyers of MBS? Is that the thing that drives the reason we look back to N3 forward?
So,
it's
go ahead.
it's Fannie and Freddie guidelines. I mean, basically the secondary market and the buyers want the stamp of the federal government behind it. So if they make changes, I don't think that's going to affect MBS buyers. I'm sure there's going to be some conversations there, but I would imagine that they'll adopt, whatever's in the guides.
Ira had a great question in here as well. I want to make sure we touch on a little bit. He said, with some of the initiatives changes, it's not an even playing field, which is frustrating at times. Some companies are able to offer things that put them in a competitive advantage. I understand some need, to maybe be tested, but when someone is able to offer direct to borrower grant or lower down payment offerings from Fannie Freddie and others are not, some of these possible offerings follow the same path and put smaller mid-sized banks at a disadvantage. He's just curious if any of that was discussed or.
Yeah, and like one quick example is, soft pull DU. We reached out to Fannie and said, it's closed. Well, like, how do you roll that right there? I mean, that's just plain, it's not fair. I mean, I understand it's in testing, but when the larger, because someone pinged Fannie or Fannie approached them first, they get to offer it, but no one else does, that type of thing.
That was not discussed, at least to my knowledge. It's a great point. I think you're going to see a lot of these technologies that came to light be tested in environments. And so, that's something that we're trying to suss out with the FHFA now. I've had some conversations about committees and having lenders on them and being, testing pilots and stuff. It's something that some of the stuff that we do in the collaborative tech fund with our portfolio companies that we invest in. But I think that's a really good point. Yes, they will have a competitive advantage up until the point it becomes mainstream.
Yeah. Well,
and there's also going to be that where, investors look at risk differently until adoption across the board. So if you're not a Fannie or Freddie direct seller servicer, then you're going to have to work towards what the investor requirements are, where you might have like a Chase on the retail side that would allow, you to use these alternative data sources or, the things that we did talk about. But then on their correspondent side, they don't allow it. So that was not talked about in the event, but we did talk a little bit about that when we did the visit to DC to talk about, for example, having, the special purpose credits for banks, but not having for lenders, and lenders are serving the most of your minority underserved communities, but yet they don't have access to the same things that the banks do, and the banks are turning to the lenders to try to buy it up, and it's just like it is a mess. So bringing some parity, much like LO comp to broker comp, bringing parity to that as well. So it's being discussed, and it's like constantly, we got to keep talking, we got to keep pushing, and especially now while people are listening.
Yeah. One of the things you guys mentioned in the beginning about, kind of your main objectives and kind of your task as being a part of this tech sprint was to look at ways to kind of remove barriers to home ownership and expand home ownership through, LMI communities or those sort of things. Are there solutions now that we're kind of talking about DPA and offerings there? Are there solutions that were discussed during the tech sprint that you think would be valuable for everybody to hear about?
There's one around
you got
alternative
you got
data.
two winners on here. You got Jody and Tom.
That's right.
Tom's just a great presenter. I don't know about his product.
No, Tom definitely needs to talk about his. One of the things that we talked about in our solution was an alternative data source and alternative income. So for borrowers who receive consistent Zelle payments or some form of online payment, but it isn't, there a lot of people have side hustles going on, and the one that Tom Cunningham kept talking about was, or I'm sorry, Mark Cunningham kept talking about was like this purse sales market, like the black market for purses or resale of purses, and seeing Zelle and Venmo money coming through consistently, and being able to use that, if you can see it consistently on asset statements, being able to use that as income. And what we do know that if in order to be successful and to move some of these initiatives, then it's going to have to be beneficial to the lender, it's going to have to be beneficial to the agencies, and it's going to have to be beneficial to the IRS. So the IRS isn't going to want us using income that they didn't receive theirs on. So we even went as far as exploring the like a 1-year look back for those payments without a penalty, paying to the IRS to be able to use that as documented income. The IRS wins, the borrower wins because they have more qualifying income. And then, the agency wins by using alternative income sources to help more and more borrowers. The other example for access in Christy Sook's solution, it was that you had a REIT that bought homes that were underperforming, resold them for not more than they were purchased for. So the idea wasn't for the REIT to make money, but the only individuals that those homes would be available for is first-time home buyers, or that are within a minority community or census tract, to be able to allow, so you don't have the investors buying up all of the property, but creating some type of inventory towards there. And then Tom can go through their awesome solution, which also would open up credit.
Well, happy to. And yeah, Jody and Mark's presentation definitely got not only the judge's attention, but some of the agency SMEs there too. Anytime you're coming up with a solution that can help filter money back to the IRS, you got everyone's attention in the room. But my team came up with, it was called a no to yes machine. And essentially it was digitizing the adverse action process. So, just really modernizing an existing resource in play, where essentially you're providing a link to register with this platform for consumers as part of their adverse action notice. And then they get referred in. And once they register on the platform, consumer gets more detail and actual insights on ways to solve for the reasons or rationale behind their adverse notice, as opposed to those traditional like boilerplate reasons a consumer traditionally gets that in many cases doesn't mean a whole lot to them unless they're really financially savvy, or they have a consumer credit resource that they can then do the legwork to get in contact with and refer. Just in the modern age too, really the goal was with the platform to track progress that the consumer was making based on information they were submitting in, and a mix of soft credit pulls to track their progress. And then once they hit their milestone of being approved eligible, deliver notice back to the lender, the original lender they applied with. And then kind of a next phase for the solution to create it into a lead gen tool where you're providing similar notice back to local lenders that are on the platform as well. as well as a listing back to the consumer with the lender they applied with first, top line of lending resources they could then seek out to look to reapply with. And I do see another tech sprint participant on the line, Janelle from DocuTech. I'll cede floor too if feel comfortable kind of chiming in and talking about your team solution that you were up there presenting on.
Yeah, absolutely. Thanks, Tom. I really appreciate it. So our team focused on the lack of supply in housing across the United States, and really focused on, how can you solve that? You can build new homes or you can renovate existing inventory. And so we focused on renovation lending, and renovation programs exist today. But there are some headwinds in that people who need them might not know that they exist, or they can be really overwhelming. So we kind of put together a portal, renovation lending portal, where a consumer could find a property that meets their criteria and meets the program parameters for the existing renovation programs. They can choose what renovation projects they want to do on that home and get estimates on what those renovations would cost, which would then give them an output of, this is your purchase price, this is your reno cost, here's your total investment, here's your estimated after reno value and your estimated payment. And then from there, it would connect them to things like HUD-approved contractors who could bid on those projects, lenders who offer the renovation programs, and also a critical component is connecting them with grants or DAPs, search engines, so that they can find a way to get that down payment to make that a reality for them. Thank you, guys.
Thanks for sharing.
That's fantastic. Brad, are you okay with me sharing your thoughts? Do you want to share them? Okay.
You can say.
He put in the chat, the VA loans have very little delinquency even when they're offering 100% financing. The reason is because they value disposable income and reserves. In my opinion, these are the most important factors when evaluating the borrower's propensity to pay. Absolute spot on point, Brad. I think a big takeaway for me from all of this is FHFA's willingness to kind of think outside the box from a risk perspective and what they've traditionally kind of looked at. So that's, when you start thinking about reserves, you start thinking about kind of residual income requirements, those sort of things. It makes a ton of sense. All right. Well,
they also include childcare in there too, which
yes, they
right?
do.
Yeah,
Yep.
which is childcare is one of a very large portion of somebody's income if they're paying for it, which should be evaluated as well. Yeah. Not saying that we want to do that in the conventional. I would just add more cost for the conventional loans. Just saying.
I can speak to that. I had twins, and our daycare bill was more than our mortgage payment at the time. So, okay, so let's talk about there was also some fantastic speakers that were a part of the Velocity Tech Sprint, and John Hope Bryant's message. I think really, and if y'all don't follow him on social media, you totally should. He's got a fantastic organization. I would love maybe one of you guys to talk about it though. Who would like to do it? Tom or Jody or
Jonathan was passionate about it.
Okay. Let's have
Jonathan. I am. I love a success story. John, African-American male, grew up in a broken home, not any kind of generational wealth, although his mother aspired for that. Saw two of his mentors gunned down in front of him, and spent a lot of time talking about his business model for low to moderate income folks for rentals. He's got about 700 or so rentals. He offers a program inside, which is, this is his for-profit division. Thought outside the box, how do I help people get into homes, create that generational wealth? So helping them increase their credit scores and their savings, and if they do and they hit the KPIs that he's set out for them, then he gives them 10% off on their rental payments. And he said, make no mistake, that is a business decision, because now I don't have to deal with them on our books on the back end, right? So it was really very creative, and he's very supportive of his folks to go get homes. The other side that was much more inspirational was his not-for-profit, entity, which is taking folks that have been successful, partnering with large entities, and putting boots on the ground in communities for financial fitness and understanding. And that's something. I think he used the term, if you have 10 friends, or not, does he say 9 friends and they're all broke, you're the 10th or something like that. It's like, I think that's what he said. So basically you're going to hang out with people that are like yourself. And so this financial literacy, like where he's taking boots on the ground approach, which is something that I believe actually needs to take place. I mean, we're not going to solve it. And I hate to say it, I don't want to be offensive to anybody, but a bunch of old white bankers are not going to solve this problem for those communities. It takes somebody who's from those communities, who's raised himself out of those communities, to understand that. And so the boots on the ground approach of actually going into these communities, getting to folks where they're at, where they go, and bringing them into the fold and mentoring them and helping them understand just the financial world, the credit markets, how to save. He didn't use the term financial fitness or financial literacy. Do you guys remember what term he used? I can't remember what term exactly he used. The same thing, but it was more, it resonated better. But getting these I don't think it was financial literacy. I think it was something else. Anyway, but he ultimately, is partnering with all these big companies, getting them to contribute millions of dollars in, and talking about this concept of generational wealth. And the generational wealth, having homeownership be part of that, being able to pass that down from family to family, and giving those folks in those communities a chance to actually become middle class because of that wealth. This is a decades-long project. It's not something that's going to come out tomorrow. You're not going to, talk to 1,000 people and it's going to move the needle. But you talk to 1,000 people, and you talk to another 1,000, you talk to another 1,000, talk to another 1,000, and maybe 10-15% of that take that back to their families. And you start really, really chunking away at at this cultural issue and family issue of understanding that. And so it was really, really important and passionate. Again, this is what you infer from the text print, what the FHFA's, one of their main focuses is bringing folks into the fold that, have no sort of ability to get through a mortgage underwrite, and don't even understand how to go through it. And it was very, very passionate. So there was a lot of folks that were inspired, including myself, about that. I don't think that that's ultimately what the text print can do in the FHFA, but it is something for us to consider. I think we have to get our financial house in order, or operational efficiency in order, so that we can then redeploy human capital to do some of those things in those communities. But ultimately, I was very moved by his story, and just the fact that he had 2 of his mentors gunned down in front of him in those neighborhoods, and he's still able to carry on and move himself forward was truly amazing.
I completely agree.
Yeah. Only thing I'll add is, I think it was really cool. I didn't know much about John Hope Bryant coming into here, but just understanding his Operation Hope and really the narrative behind the continued work that they're doing on multiple fronts is essentially to help all people, in the invisible class become fully integrated into our nation's economy, and obviously through financial literacy and being able to create avenues to home ownership, accomplishing that.
Very, very nice. Yeah, there's also some speakers on like the National Fair Housing Alliance. They weren't quite as, I'd say, passionate with regard to these particular objectives. And they still did a great job and everything. But John is a professional speaker. There's no doubt about it.
No doubt. And I'll point to even one thing Sandra T said in her opening remarks, just pointing straight at kind of the problems we were out to solve, is that, over the past decade, origination costs have doubled while delivery times have remained unchanged. when used responsibly, technology has that potential to improve borrowers' experience. And she pointed directly to, reducing barriers, increasing efficiencies, as well as lowering costs, which is what we constantly talk about. Yet, here we are, decade later, still trying to solve the same issues.
So let's talk about some of the big takeaways from the solutions that were presented. Were there any that didn't quite land as well as you thought they could have or should have?
I'll jump on this first. I won't critique other teams because I honestly can't. As John mentioned in the pictures that were being taken through the live stream, I honestly spent every last minute tweaking my pitch until it was my time to go, just to get it under 5 minutes.
He was sleeping.
No, they deprived us of coffee, food, and anything that morning. So there was no sleep to be had.
That's great.
So there was a couple of sort of big things that everybody was enamored with that I think we're going to have some challenges. And it is of my just opinion, right? So I don't want you to think anybody's fact that some of the consumer facing products that actually won or got some attention would be very difficult. So one of the ones was like that one, and I apologize if anybody's on this team, I'm not looking to offend anybody. But was the FHFA chatbot. And so it was chatbot controlled by FHFA using large language models and having access to data points and this back and forth. And I just kept thinking about it, and it won one of the prizes. I kept thinking to myself, like, who's going to use this? How is the FHFA going to get people to use this? And like, it didn't resonate with me. So consumer facing products are very difficult to get engaged. And so I think a lot of the things that are on the lender side, because the lenders have this experience with engaging the consumer and helping to bring them along, I think that those are the things that I was, a little bit more interested in. And I thought would have a much more outsized impact. And we could spend, $15 million building this chatbot that, that a couple hundred people are going to use.
Or it would take, 2 hours to provide a response because it has to go through so much legal review to make sure it's not saying anything that, will fall back on. Yeah, I'm with you.
There's a lot of companies that are out there engaging, communities for that. And I just didn't see that being sort of viable in the marketplace. There are other things that didn't win that were certainly, viable too. What emerged was like, concentrated data sources, right? Clean data, being able to transmit that data, having access to that data, right? And then there was a lot of ideas around public-private partnerships. Guys, I don't think we're going to get out of this. Like, I think the FHFA is going to be our partner on multiple things. I mean, they're looking to rinse and repeat. So if they get piece of technology out, they decide, they get it funded, we get it tested. Hopefully it's the TMC lender members that are in the mix on that, and we're gonna really push for that. And it is successful even on a small scale. They will rinse and repeat this over and over again. So I think you're going to be looking at more of a public-private, some site oversight, whatever that looks like, or the decisions to have multiple third parties come in and have oversight over this. And that was very clear that is a likely outcome of the tech sprint, which again, I'm in favor of, just to get everybody to operational efficiency. Not that they're going to take over your businesses. The technology that's coming in will be pricing controlled, access controlled, stuff like that, with that kind of oversight. What gets built, how it gets built, who gets deployed to, that kind of stuff.
And Melissa, I think like most people, I like to see what there was a lot of overlap and where people were going, as opposed to, what didn't land well. There were 80 people. I told them I felt like the dummy in the room, but there were 80 like extremely intelligent people that made you feel like you didn't know what things meant. But so I think that from the aspect of things that did land well, And it was something that we won for, but I just think that that's because our delivery was better, Jonathan. But
Just
anyways,
rub it in. Rub it in. You had Mark Cunningham who made you tell like a cancer story to pull on the heartstrings. And then you had Tom, who's like one of the most charismatic people on the planet, you know.
Oh, y'all know the competition is over, right?
No, never. I have bragging rights until the next Velocity Tech Sprint.
Fantastic.
But what I'll say, and a lot of people did, like even Jonathan's team, that direct to data source and being able to carry that data all the way through the process so that you're not paying for re-verifications, you're not paying QC costs because that's a cost that is already there, and apply some type of validation that if you got your data through an approved data source, that when that loan goes to Fannie or Freddie, even if they pull that loan for QC, that isn't being reviewed again. Like I'm not having to go through that. If you alter that documentation that other than what came back, or, you know, like say that you're going to direct to data, you're going to Halcyon and bringing IRS data into an income calculator that they say is good. If you use that income, don't make me QC it and pay for the re-verifications of the QC process. Don't get to Fannie and Freddie and delivery and then tell me I need to tell you how I came up with the income again. So that will create efficiency and also decrease cost through the process. And the same thing for the, you know, for your assets. Like if you are using an approved source to do your third-party asset review, you're not asking me about that again. I'm not paying my NQC to re-verify the data. We did a calculation because we were given like lender scenarios. And in a lender scenario, we equaled out the things that we were solving for by doing ID verification, asset verification, income verification, and verification of rent and mortgage. We equated it to about $95 worth of savings just with your re-verifications in QC and your re-verifications that you do within the process. And you take that multiplied out by the number of loans that Fannie and Freddie did last year, and you would have $300 million just of verification cost savings. That doesn't count FTE cost savings. That doesn't, it removes that. And that is where we're going to get success. And that definitely was something across many teams, was that direct to source data that would allow us to decrease cost.
Yeah. I think as our industries continue to evolve, we still have kind of legacy guidelines and legacy regulations that need to evolve with it, right? Some of those kind of re-verification processes are because we just had pieces of paper, right? And we did have a lot of, you know, fraud on those pieces of paper, you know, and so, you know, I think it's a prudent time for us to reconsider those to, you know, especially if we have more direct to data connections that can help us to, you know.
And even if you don't have direct to data, if you use if you use Trained as an example, and you're doing an OCR scrape of W-2s and pay stubs, coming up with a calculation, then you have an asset document that the direct deposits have a correlation that validate that, then you don't even have to have direct to source data. You just have to have third-party vendors that you trust, that Fannie and Freddie trust for that, and you still get the same outcome.
That's right.
Yep.
Well, you know, we've got about 10 minutes left, and I want to make sure you guys, if you have questions, please make sure to put them in the chat for us. I'd be happy to read them out and make sure we get them addressed for you guys. You know, let's talk about before we go, what is, you know, tell us about kind of your overall experience in it. Would this be something that, you know, if asked, you guys would participate in again?
Yeah, so I brought this up as needing to be a question. So a lot of people have asked this out of it. And I was like, it gets you out. We're so busy like running companies that we get so focused on what we do. We don't allow ourselves time to think about things and think about things differently. So it was an amazing experience in that it got you out of your typical work day. So it opens up your mind for creative thinking. And then you also have access to some really intelligent people besides the 80 participants, our scrums and the agency representatives that were there as subject matter experts, just a tremendous amount of knowledge in one place in a short period of time. So that was amazing. I will say that I will count it as the most amazing experience of my career if FHFA does something with it. If they do nothing, it was great for me to be able to go and have drinks with Jonathan in the evenings and to get those creative juices going. But I definitely, if they don't do something between now and the next Velocity Tech Sprint, I won't participate.
Well, how did they leave it with you guys? Did they have like next steps or anything that they communicated?
Yeah,
I think Jonathan has inside information.
I do have inside information. So
Tom and I, the dummies, know nothing.
I do have some inside information. So one of the judges, Faith Schwartz, who we're trying to get to Tech Day in September here. Hopefully everybody's coming to Tech Day. I would kind of promote that. We got 6 great companies. Just my plug. Anyway, Femi, you better be there because I've seen you at those things before. All right. So anyway, so my conversations with Jason Cave, who's the deputy director, and Sandra and Chris Dickerson, and the collaborative, and bringing Tom and Mark Cunningham from Trust Engine, all of that stuff. The push that we're doing is that committees and subcommittees are stood up, led by the FHFA, with the sole intention of funding and dealing with the incumbent technology players, making sure they have a seat at the table, and the lenders and the trade associations to take these technologies, get them funded, get them built, and push through the industry, right? And it's an alignment that I've never seen happen in my 20-some years in the mortgage space. The fact that everybody is very interested in this. So I would be very surprised if nothing came out of this, just because of the conversation. Now, what it looks like, who's on the panels, I've made some suggestions, and Christy Sukim has made some suggestions, and Mark Cunningham and Faith Schwartz and Jody and Tom, right? So we've made these suggestions, and we're going to keep pushing for like a committee to come out. So a rinse and repeat for us would be, hey, we got these great ideas. These are the common themes that emerged. Let's figure out how to get it done. Which technology player, which people, who wants to be managing this? Let's get the venture capitalists to the table, because they've got the big money to put through. And what a great thing for venture capital, because now you have industry alignment, product market fit, and a whole bunch of people working on it. Where is that huge risk? Then it becomes an execution risk. So do the people you hire not able to execute on the technology? So you kind of de-risk a lot of that. And so I'm hoping and I'm hopeful that that's what comes out of it. I do not have the exact look and feel of this. It seems to be going that way, but until somebody sends me something to sign, I don't know. So, but that feedback was carried by pretty much all 80 participants. I would do it again just because you get a chance to, spend time with the Fannie and Freddie executives and all the other folks. And I met some amazing people. I didn't know anybody on my team. They split us up, so we had 10 teams of 8. I had no idea who was on my team. I wish I was on Jody's and Mark's team, but no, or Tom's. I would have taken Tom. But I met some amazing folks. They're engineers from Amazon. I mean, the moment we were done, the engineer from Amazon is like, let's get this done. Like, call me, let's get it done. I want to build this, and for our stuff. And so, I think there's going to be a lot of that coming out of these things, but it was the first one. I would participate in any fashion that they asked me to, because I'm a huge believer in this. And yeah, I donated 4 days of my time while running a startup. Not the easiest thing to do. Basically came home. I left a family reunion with my family in Deep Creek, Maryland. They were there for a week. My wife was so angry with me because they moved the tech sprint to that week.
And let's clarify, it was John's family too.
It was
not his
John's
wife's
family. It was 35 of John's family. And I got back. I don't think my wife looked at me for like 3 days. We're good now, but it took a little while to smooth that one out. And then, you know, and so I'm in it. I like to eat, sleep, and breathe this shit. Pardon my French. I'm in it, but I understand Jody's point, and I understand Tom's point. Their ideas want to get pushed out, and everybody had that same. If nothing comes of this, they're gonna have a hard time. I mean, raise your hand if you actually knew about it without wanting somebody just actually spending time on it, right? You know, between myself and Christy, I think we got 15 participants. Nobody knew about it, right? And now it's all over social media. It's all over. So I think they're going to capitalize on that, you know, and everybody's like, well, I didn't know about that. You know, how did you guys discover it, right? And so I think that there's a lot of that momentum going on, and I if they don't do rinse and repeat, I mean, you got an industry that's ready for this. I mean, they've got to capitalize on it. That's all I'm going to say. I will do my best.
And Melissa, Chris Dickinson stopped by, although he did call me Julie. He did want me to know that he was coming back to TMC and that I wasn't offensive enough to deter him from coming again. So
Fantastic. Thank you for
Thanks,
letting
Julie.
he tell us he was coming to Nashville. So that's great. Hey, before we wrap up, I want to make sure that I say thank you guys so much for sharing your insights and your expertise with us. It's been incredibly helpful, and I hope it's been helpful for everybody here on the call. We will have this every month, and we will kind of go back and forth with industry thought leaders like Jonathan and Jody and Tom, and we will go and we will bring in outside the industry thought leaders that have already started to kind of leverage AI for either workflow or consumer experience. So we're kind of going to go back and forth each month between kind of inside the mortgage family and outside the industry, so that we can learn from other industries and what they're implementing and offering and seeing, and how they're able to get through kind of employee adoption and consumer utilization rates, and how they assess risk for their organization of where they implement technology and where they start to think about AI, and how they build out processes that are unbiased and those sort of things. So we have lots and lots of really robust discussions coming in this group, and want to say thanks for everybody for participating this time. Next month we're going to have a speaker. Her name is Lily Reiseball. She is leading the AI effort for IBM. So she is going to talk to us about kind of risk assessments of your organization, and kind of how where to start, and a few other awesome topics that I'll kind of leave a teaser on for you guys to pay attention to as we kind of continue the series. Any questions before we go and let everybody go? Okay.
See you all at the Tech
Just
Day.
excited to see where SparkLab
Register for
evolves
Tech
into.
Day.
Yeah.
That's all I'm going to
Yeah.
say. We got 6 great companies. And it's TMC
That's right.
product. That's not,
That's
Register
right.
for Tech Day. Jody's a judge.
Jody's a judge. Yep. Make sure you attend TMC Tech Day. We in Nashville. So attend Nashville, attend TMC Tech Day. Look forward to seeing you guys all in person very, very soon. And thanks for joining us today.